Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong level of monthly demand and support from a historical perspective. In fact, starting from way back here, in multiple occasions the market tested the zone and rejected it to the upside quite aggressively. And what we can see is that at the moment the market once again has just tested the exact same zone. So from here, what we could expect is to see some potential bullish price action being created away from this level, as already happened in the past every time that the market tested this zone. Dropping down on the weekly time frame, what do we have? Well, from a weekly perspective, the situation is quite similar. We can notice, in fact, how this area here, from a more short-term perspective, has been acting as well as quite strong support, starting from here when the market tested it and immediately rejected it to the upside. Then again, we had the market that went and created another test of the zone, then another one here. And at the moment, we just had the start of a rejection away from that zone. So from here, we could expect to see more bullish price action being created away from this area. So the weekly time frame as well seems quite bullish. Now, let's drop down on the daily time frame and see what we have. Well, from a daily perspective, the situation is very interesting because the market has just created a manipulation from a daily perspective. In fact, when we had this push to the downside, the market broke below structure. Now, most traders, when they see a break of structure to the downside, so let's say we have a support level, okay? This area here is acting as support. What most traders do if previous support gets broken to the downside is they start shorting, right? They add short, 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 short. That is when, if a hedge funds, big players in the market want to manipulate the price, they can use all those selling orders to actually buy. Because in the market, for every seller, there needs to be a buyer, and for every buyer, there needs to be a seller. And in every specific moment in the market, if there isn't enough liquidity to fulfill the orders to the other side, so if, for example, hedge funds want to buy, they will create a break of structure, people will start shorting, and they will use those shorts to actually buy. So if they want to create a manipulation, a break of structure with a lot of selling pressure is the perfect opportunity to actually buy, and then the price starts pushing to the upside, which is most likely what happened exactly here. When we had this support level, the market broke it to the downside, and immediately the next candle broke back above the zone and pushed higher, showing how there is a high probability that we actually started to see institutional longing at this area, which is also the monthly historical support that we have just previously identified. Now, in a situation like this, it is quite clear how we also now have a break above structure, because this level here is now previous daily resistance, which is now turned support here. And what we also know is that from a pattern standpoint, since we have an impulse and now the start of a correction, after the impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.3 to 50% and 0.618 Fibonacci retracements all lining up exactly inside of this area, creating confluence of support in this area that we could in fact expect this market to want to go and test and then to reject to the upside. So this area that is a confluence of support is an area inside of which we have good probability of seeing more institutional longing, further increasing the probabilities of a potential push higher away from the area. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, so what hedge funds and the big players in the market are doing, and we check the data precisely for the euro, the first thing to keep in mind is that if we're checking the data for the euro, actually we are already looking at EURUSD because all currencies on the spot are traded against the USD. And what we can see is that, in fact, net positions with the last report have started to be increased. We went from having minus 9.9k net positions up to minus 6.7k net positions, showing how institutions have been moving back to the bullish side for EURUSD, making it stronger. And since now we had this break to the upside, there is good probability to see even more institutional longing. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find on the screen and also linked in the description, so you never miss new updates. Now, in a situation like this, if the market will test this area, what would I expect in this kind of situation? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market at that point, I wouldn't be surprised to see a potential push higher, completing this daily impulse correction and impulse pattern to the upside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.